Warning. Listening to this show may result in increased levels of inspiration, motivation, and innovation. Side effects can include the immediate urge to take massive action to build a better business and life for yourself and others. You've been warned. Welcome to Influencers Radio with your host, Jack Mize.
So have you ever wondered, folks like Richard Branson, Warren Buffett, even, and of course, you know, I'm talking about gazillionaires, right? Even people that are, I'm not talking about just, you know, they're rich or wealthy. I'm talking about the super wealthy, the extremely super wealthy folks, even ones that you may not have ever, you know, heard of or talked, you know, you've never heard their names, or if you've ever gone through not just the affluent section of maybe your town. I'm talking about the places where it's like, what do these people do for a living to live in these, just opulent, mansion is the word. And you think, do these folks get where they are because they saved enough? Did they get where they are because they did the things that they've been told to do? They did the things that, you know, you see people guiding you to, and you watch the financial networks, you watch the morning, you know, finance shows, At the Bell, all that kind of stuff that tells you, here's what you need to do to build wealth. Here's what you need to do to, you know, you save, you invest right, you invest some to keep safe, you invest some with a little risk, and you'll end up having a great retirement. And there's a lot of folks that realize that that's not the case. And you know that there's got to be another way, but it's certainly not the way that is put out there that you see on the TV shows, that you hear on the radio. There's another way that is, and the reason you don't see that is because it's not the easy answer way. It's not the way, and that's the way that you see things in the marketplace in general. Not just with finance, but, you know, if it's not an easy answer, let's face it, easy answers sell. Real answers oftentimes don't sell. If it seems like it's going to be difficult, if it seems like it's going to be complicated, it's generally not put out there to the masses. And that's just, you know, that's just the facts of marketing. It's the facts of what gets on TV. You know, what are the masses? What's the lowest common denominator going to have an attention span for? So there are other ways. There's lots of options out there, and that's what today's guest is here to talk about, the options that you don't see in your company's 401k plan, the options that you don't see when you talk to someone at the investment advisors, mutual funds, that type of thing. They're not the options that you see because they're not easy answer options. They're not options that benefit them. And so this is definitely an Influencers Radio edition that is going to maybe open your eyes to the fact that you just have to take some blinders off and check out what the options are, that they're not just the ones that are easy and spoon-fed to you. So today's guest is Minesh Bhindi with Gold for Life, although don't let the name gold fool you. He has a lot of really good ideas and information on how people that have done the right thing but find that they don't have the money that they need to live the life that they were told they were going to be able to lead if they followed the rules. And you actually have more latitude than you may have thought. So right after the break, we're going to find out exactly what those options are.
Don't miss a thing. Listen to and download past episodes, get show notes, resource lists, and leave feedback at influencersradio.com.
All right. Welcome back to Influencers Radio. Let's get right down to it. My guest today is Mr. Minesh Bhindi. Minesh, he owns and runs goldforlife.com, which is an investment community of strategic lifestyle investors. Now, if you don't know what that is, we're going to find out here in just a minute. But what's really impressive is the 92% success rate that he has with the folks that he works with. It's the highest in the industry when you look at it across the board. But what he does is he teaches people how to use lifestyle investments. And we're going to talk about what that is. You're going to come up with a complete understanding of what that is. But what it is it's to protect their wealth, but not just protecting wealth. It's also about how you can start living that life that they love, right? The life that they romanticized about when they did the things that they thought and were told they were supposed to do. And he shows them how to do it with really simple investments that anyone can do. Minesh, welcome.
Jack, thank you for having me on the show and allowing me to help your listeners.
Well, fantastic. Well, here's the one thing. This is the thing that I'm really excited about having you kind of unveil, and that's pulling back the curtain. So many people that have gone through, they read the books, they've watched the TV shows, they've done everything that they thought they were supposed to do, that they were told they're supposed to do, to be ready to not just have a retirement that they can, survive the rest of their lives, but one that they could be comfortable and do the things that they really wanted to do. A lot of them have put off the things that really would make them happy because they were doing the things to allow them to do this to retirement. And when they, get there, and I see this, I've seen this in people in my family, they get there to that day, and when they start counting it up, it's just not enough.
Yeah.
And it doesn't match up to what they thought it was going to be. What is a lifestyle investment, and how does that change the dynamic of that?
So firstly, I want to acknowledge that issue because that is a big issue that we're seeing today. I mean, not only have people got the fact that they haven't got the amount of money that they needed right to start off with, but they've also didn't factor into account the high tuition fees they're going to have to pay for their children and all the other expenses that come along with life. And it's really led to a situation where people can't see a bright future. And the problem with that is when you can't see a bright future, you just don't know which direction to walk in. Now, what a lifestyle investment is you see, a lot of people get confused. They think that either I'm going to have to put my money in a savings account or I'm going to have to become one of these billionaire investors that's constantly working, sacrificing life, giving up all aspects of their happiness just to make money. A lifestyle investment is an investment that does what it says on the tin. It funds your lifestyle. It's an investment that allows you to get a better than average return that doesn't require a lot of time input, and also allows you to do things very, very simply so that you can continue to live the life that you want to live while your money's working for you much better than in a bank savings account.
Well, okay, let me ask you this, because really, how much difference is there? So, it seems like there's only so much that people can do with their money, especially if they're in the corporate world. They're socking it away in their 401k. They're putting stuff away in their IRA. You see the commercials for the stock houses and the mutual funds. And when it comes down to it, a lot of the stockbrokers or these investment advisors, if you will, it pretty much is a heads I win, tails I win for them. But they always have a reason. Well, the market goes ups and down. You do your dollar cost averaging. There's always a reason why it's not doesn't end up being the picture that they painted. What's really the latitude? How much flexibility do people have besides either putting their money in what they call safe returns or people putting their money into stocks and mutual funds that, have more risk reward? It seems like that's pretty much your choices.
Well, truth be told, 90% plus of professionally managed funds that are advertised to people all day, every day, do not beat the basic market returns on a year-to-year basis. Now, that's very, very scary when you look at it. So then it makes you wonder, why do people opt for these funds? Well, because number one, they know that a savings account is not enough. And so you add into the fact that a savings account is not enough, plus the fear-mongering that's happened throughout the last 50 to 60 years, telling people that, you need an expert to manage certain parts of your life. And so they get sold onto this idea of, I need to go and find an expert. What they don't realize is they might be driving up to the expert's office in a Mercedes S-Class, but the expert that they're giving their money to took the train there.
Yeah.
That's the biggest problem. It's this whole fear around I'm not responsible enough to manage my own money, and it's something that we've been taught. And the fact that the numbers show that the most professionally marketed, professionally managed funds do not outperform basic market returns over the long term is evidence to this. People need to take control of their own money, and they've got to get over that fear.
Well, there's people that I think, some that are aggressive, they understand they take control of their own money, but there's a lot that I don't think realize what's available. Because when you look at some of these, when people think I'm going to invest for retirement and they say, here's our choices. And sometimes it's very limited. And it's almost like going through a cafeteria line and seeing, well, here's potatoes, here's chicken. I want steak. Oops, they don't have steak. I guess that means I can't have steak. But what you're saying is that's wrong. Just because you don't see it on the menu of what's being put in front of you, there's still a lot of off the menu stuff that people don't realize that they can use to, and actually what you call the super wealthy use to actually reach that goal that, they were sold, that they were told would happen, but rarely occurs with what they're presented. How do people find out about that off the menu, choices that they might have?
So let me just break this down very, very quickly, very, very simply. So when somebody's looking to invest their capital, they've really got three choices that they're presented with, just like you said in the cafeteria line. Number one is a savings account, which, as we know, doesn't even beat inflation, right? Number two is real estate, which, as we know, can be affected by all sorts of different environments, especially when it comes to over-leveraging in the market, natural disasters, et cetera, et cetera. And then they get these mutual funds that don't perform better than the markets on an average year. See, the problem with those three things is that these are very controllable asset classes, and that's why they're taught to the average public, because wealth can be controlled. What people need to realize is that to get a fundamentally, consistently outperforming asset, they need three things. I call this the wealth triangle philosophy. Now, we implement this into every investment vehicle, every lifestyle investment we go into. And the triangle, the three parts of the triangle are this. Number one, you need to buy your asset below market value. And it has to be an asset that's booming for the next 10 years. So you got to do your research, and you got to buy the asset below market value. Why? Because you make your money when you buy. And that's when you're locking in all of your profits in step one. So you buy a booming asset below market value. Number two, you want to cash flow that asset. So you want to find creative ways of cash flowing assets. Like our community is currently focused on gold and silver because of the way the U.S. economy is and other things in the world. Now, what most people don't realize is that you can cash flow gold and silver if you look creatively, and that's what we teach people how to do. So you want to buy gold and silver. Let's take gold and silver, for example. Step one, we want to buy a booming asset for the next 10 years below market value today. Number two, we want to maximize the cash flow. And step number three is very, very simple. We want to buy more of that booming asset. And you put all of these three things into plan for any investment pot, any size, it's always going to grow.
Well, what you just said, step one, buy an asset below market value.
That's right.
Is that even an option when people are dealing with mutual funds? Is there any way, where they can go and say, hey, I want a deal. Let me find someone that's hurting and buy their mutual funds below. The price is the price for most folks.
This is the thing. In a savings account, you're not going to go and invest, for pennies on the dollar in a savings account. You're not going to go. Real estate is probably the only option where people have got the opportunity to buy distressed property under the real market value, especially in the economy where we are today. And with mutual funds, obviously, as you said, it's not possible.
Right. So I can go to my bank and say, hey, I want to open up a $10,000 savings account, but I only want to give you $5,000 to do it.
Exactly. And put $10,000 in there for me, will you? No, okay. They're not going to do that.
But that's where people think that those are their only options. Now, I think one of the other obstacles that I think a lot of people face is, okay, well, this is for people that are just dripping with cash.
Yes.
Right. What realistically, is this something that Joe Sixpack can do? Is this something that, where does someone need to be to actually realistically think about this as a real achievable option for them? And, well, actually, you know what? I'm not going to give you an and. I'm going to do the and as a follow-up question. So let's go that. What does someone need to be, where do they need to stand financially to do something like this? So
first thing that people need to understand is if they've got absolutely no income, then really they shouldn't be thinking about investing. It takes the investing portion out of the equation. You need income, and then your savings get invested. This is how you create a stable financial plan. Once you have that, I mean, we help people that have got, $100,000 minimum to invest, or they've got $5,000 minimum to invest. You can really do this with, I would say, as little as $5,000. And that's my opinion. You can do it with a lot less if you're saving and you're just starting out. But my opinion is $5,000 you need to start, and then, comfortably grow that every single month with the income that's coming in.
So let's take it to the other extreme. Let's take it to the people that aren't just starting out. Let's take it to the people that have done what they thought they were supposed to do. They followed the blueprint that they were sold to a T, and now here it is, time that they're supposed to cash in, time that they're supposed to tie up that hammock and do the things that they want to do, and realize that, this just doesn't add up. Is it too late for them? Is this something that, you say, well, I wish you would have come 10 years before? What are their options?
Jack, let me explain something to you. That is who I want to help. And I was speaking at a seminar in front of 2,000 people. And I said something that raised a little bit of it was a little bit controversial, and it got people's emotions swaying. And what I said was, I care more in our community about helping people with the most money right now than people with the least money. Let me explain why I said that. Inflation is currently, real inflation rates are sitting somewhere between 8 and 10% a year, which means somebody with a $500,000 portfolio is losing $50,000 of value a year on their fund. Somebody with $5,000 is losing $500 of value every single year. Now, the law of making money says the more money you have made, the more value you have to output into the economy. So what I want to do is help people who have made money already, have followed the blueprint to a T, have, got money sitting in a bank account that they're losing value on at the rate of 10% a year, and show them how to protect that. That's typically who I specialize in. And it's not too late at all. As long as, it's never too late. People, this theory of too late is like saying, oh, am I too late to be saved? Should I just, what are you going to do? Go and die now? That's not an option.
Well, I think that right there are the folks that, the person starting out to me is the person that they've got every direction in the world to go. They can walk in any direction, and they have time to make mistakes. Right. But the person that is at that time that they thought they were going to be a lot further than they are, to me, that is the person that I think is the one that may be the most panicked, that I don't have the time that I had to make mistakes. I don't have time to try things that may not work. So it's not even that fear of loss of money, it's that fear and loss of time that they need to get to make what they have put together work for them. I would assume. So,
Jack, just one thing I want to add there. One of the most beautiful things that we see in our community is when somebody who has got a $100,000 or $200,000 portfolio starts investing with strategic lifestyle investments, and that person can now come out of doing what they hate doing and start, like we had one person who's a business coach, and he was doing a job that he hated doing. Now he's come out, he's got his investments that are working for him, and he's now serving other businesses, and he's helping create jobs in an economy where the small business market is what's going to save the economy. And that we allow people to do that, to serve what they're here to serve by the use of strategic lifestyle investments. And that's what I'm passionate about.
Well, I think that's what makes you an influencer. That's what really defines you as influencer, because not just the people you help, but you are actually inspiring and influencing the people that you're helping to go out there and make a difference in the economy, and in turn the lives of others that may not even consider, what the impact of being able to invest or understand these options. Now, I told people when we started out today that we're going to kind of pull back the curtain. Why is it, when people think of I don't know who you would think, the Richard Bransons, the Warren Buffetts, why is there such a disconnect between them not seeing that these people did not save their way to the wealth that they have like they've been taught, and see that they must have done it in a much, much different way? What is the missing piece? What's the missing link between what people are consumed with thinking is the right way to do it, when they obviously see in front of them that's not how these people are doing it?
I think, I've spoken on stage with Richard Branson at an event in London, which was amazing. And I got the opportunity and the great opportunity to meet him and speak to him. And I think what the disconnect is the overwhelm of the branding and the bravado that goes around having a big business. So they look at somebody like Richard Branson, they see Virgin everywhere, they see big planes, they look at Warren Buffett, they see 50,000 people a year, chasing him to a conference, a shareholder conference. They see, him on CNBC, and it's all this bravado around what he actually does. And I think that's the disconnect. When the truth is, Richard Branson clearly gives his advice as to how he started and the truth. Warren Buffett clearly gives his advice about how he looks at companies and what he looks for. And I think it's just the overwhelm around, oh, wow, that is so big, I can never perceive myself doing that.
That is. I think that's a huge that's a huge point, is the achievability factor of it, that people think, well, it doesn't matter how they got it. There's something special there that I'm unable to achieve. But the reality is they can certainly achieve far more than what they're being fed in the traditional sense.
Jack, the truth is that it's not about achieving Richard Branson levels. It's not about achieving Warren Buffett levels. What people really want is a life that they can buy their time back, because a lot of people have lived a life so far where they've sacrificed their time, sacrificed their life literally to create a financial stability for themselves and their family, and right now they're not being given the option to do that. What we want to do is allow people to buy their time back with strategic lifestyle investments that allow them to then finally live the life that they wanted to live, whether it's fly around the world first class, reconnect face-to-face with friends from around the world, start philanthropic ventures, or create businesses that can change the world. Whatever the dream is, it all starts with a secure financial investment plan.
That's a very important point. That dream is rarely has a dollar sign in front of it. The dream is something bigger that they associate a dollar sign with, and there's ways to get that. I guess in a lot of different ways, by putting your money to work in the right way. Well, you certainly have influenced with a 92% success rate for your members. I always have to ask, you're influencing these folks. What is it that influences the influencer? What is it that influences you, that drives you to do what you do and to have this kind of effect on other people's lives, business, and their retirement? So
I always get asked what inspires me. Nobody asks me what influences. This is an absolute exclusive just for you and your listeners. One person that I follow and I admire is a gentleman by the name of Ray Kurzweil, who is a futurist. He's one of the smartest futurists on the planet. Bill Gates, Google. Bill Gates, has picked his brain about where technology is going. Google has just hired him to integrate humanity with technology. And one of the predictions that he makes, just like he's predicted with technology, he predicted that we would have computers that were smarter than the first computers that came out that would fit in our hands. And he predicted the years that we would have that in. And he's one of the smartest guys that I look at. And one of the things that he says is by 2029, people will have the option to live forever. Now, just whether that happens or not is not the case. The point I love about that is that by 2029, technology will be smart enough, small enough to allow anybody who wants to have the option to extend their life by a huge amount because of the rate at which technology is going. So a lot of people who are now planning for retirement, who are 40 today or 50 today, even 60 today, are going to face a retirement which is potentially 50 years longer than what they actually thought they would have. Now, what that says is that if you don't have a strategic lifestyle investment plan, you're going to be looking for a job when you're 110, right? And that inspires me because just imagine we can take a group of people and give them financial freedom for another 60 years with everything that they've learned. They've been through a whole host of life experiences. They know what's important in life. They know what they really want now. And we can then give them financial freedom for another 60 years to continue creating whatever dreams that they want. That's what influences me.
Well, that certainly is. I guess some people could look at that as an opportunity. Other people look at it, as you pointed out, well, that's going to be a big problem. People outliving their retirement and realistically their ability to earn money in that age and beyond. Well, I have to say that definitely been eye-opening, and I'm really fascinated with the options that people have. You know, people that have blinders on, whether they put it on themselves or they've been put on by the people that push traditional investments. You really have given the ability to tell people to take the blinders off. You have a lot more latitude, and there's some simple ways that you can make this work, and it's not too late. And I think that's the big one. And those are the people that, just like you, I feel for most that feel that it might be too late, even though they've done the right things. Minesh, how can people find out more about what you're doing, what you're up to, and the philosophy that you've shared that has helped so many folks?
You can either go to goldforlife.com with the FOR, not the number 4, Google us or YouTube us. You can, if you want to find us and you think that what we do can help and you like what I've said and what I've spoken about, just go to goldforlife.com, send my assistant an email, and we'll send you all the information that you need.
Minesh, great information. And I think you're going to help a lot of folks, regardless of what stage they're on, whether they're getting started or whether they're to the point that they're ready to, reap the rewards of what they work for. And I certainly appreciate you coming on and sharing that with us today. Thank you very much.
Thank you very much, Jake.
All right, folks. Well, definitely another influencer here. Share out what you have learned, and I think it always helps. What they say, you share it out, it comes back to you tenfold, 100-fold. So go out and be an influencer yourself today. We will see you next time.
You've been listening to Influencers Radio. To get all past shows and updates on future shows, visit influencersradio.com today or follow us on Facebook at facebook.com/influencersradio.